Welcome to the Deep Dive, your shortcut to being well-informed. Today, we're taking a close look at a pretty significant financial announcement. It's from one of India's major retail players, Trent Ltd, part of the Tata Group, of
Right.
course.
Big news always from them.
Exactly. Their unaudited financial results for the quarter ended June 30, 2025, were just approved by the board. That was August 6th.
Just came out, yeah.
We've pulled together insights from their official press release, the investor presentation, and the board meeting outcomes.
All the key documents.
Our mission today, to really extract the most important nuggets of knowledge from all this. We want to explore Trent's performance, their strategic moves, and, what these results actually signify for where they're headed in India's retail scene. It's incredibly dynamic out there.
It really is, constantly changing.
So after all that anticipation, what's the actual headline story coming out of Trent's Q1 FY26 results? What's the big picture that jumps out?
Well, the top-level highlights are definitely strong.
Yeah.
Especially given the market context. And what is immediately striking, I think, is that their fashion revenues officially crossed, get this, 5,000 crores.
Wow. 5,000 crores just in fashion.
Just fashion. It's not just a big number. It arguably really cements Trent's position as, well, dominant in India's value fashion space.
Right.
It might even signal a kind of tipping point where their scale starts creating a real barrier for smaller players. It certainly validates their aggressive expansion strategy.
Makes sense. So break down the specifics for us. Standalone results first.
Okay, standalone. Revenues, and this includes GST, hit Rs 561 crores.
561.
Which is strong. 20% growth over the same quarter last year. Q1 FY25.
20% growth, okay, and profit.
Profit before tax, PBT, also saw a healthy jump. It reached Rs 555 crores.
555 crore.
And that's up 23% compared to last year.
Even faster growth on the profit line than revenue. Interesting.
Yeah, and their operating EBIT margin, that's earnings before interest and taxes, give you a better sense of core business profitability that improved too. It was 11.4% for Q1 FY26, up from 10.6% last year.
So better margins alongside that growth.
Exactly. Now, if we look at the consolidated results, which includes everything.
Right, the broader picture.
Revenues, again, including GST, were Rs 574 crores. That's 19% growth over Q1 FY25.
Still very strong, 19%.
PBT came in at Rs 565 crores, reflecting 13% growth there.
Okay, slightly lower growth on consolidated PBT compared to standalone.
A bit, yeah. And operating EBIT, which includes their share from joint ventures and associates, was Rs 547 crores. That represents 21% growth.
21% on op EBIT. Got it.
But what's really fascinating, I think, is the trend. If you look back over the last 5 comparative periods, so Q1 FY22 right through to this quarter, Q1 FY26, there's been this remarkably consistent upward trend across PBT, revenue from operations, and operating EBIT. It really speaks to sustained, healthy momentum.
That consistency is definitely striking. It paints a picture of, robust, sustained growth, as you said. So with these strong numbers as the backdrop, what's Chairman Mr. Nolan Tata saying? What's the strategic vision driving this?
Well, it's interesting. Mr. Tata described the business as delivering steady performance.
Steady seems a bit understated, given those numbers.
Right. But, maybe that's the Tata way. He really emphasized their focus on, and I'm quoting here, evolving our differentiated consumer proposition that appeals to a wider audience across diverse markets.
Okay, so evolving the proposition, what does that mean in practice?
It essentially means they're not just, selling stuff. They're constantly refining how they appeal to customers. Is it unique products, the store experience, brand messaging?
Right.
The goal is to make Westside and Zudio stand out and attract an even broader demographic across different regions.
And what about resilience? You mentioned that too.
Yes, building resilience through their business model choices.
Right.
And specifically, building density of our presence in key markets to serve customers readily.
Density. So not just more stores everywhere, but concentrating power.
Exactly. It's strategic placement, dominating specific micro markets, making it super convenient for customers, and building like a competitive moat.
Makes sense. Less vulnerable that way.
And ultimately, he reinforced the goal to build his words, sizable and scalable, pure-play, direct-to-customer business.
Pure play, direct to customer. That sounds like cutting out intermediaries.
Pretty much. Aiming for full control over that whole customer journey, from making the product to selling it directly. That usually means better margins, a more consistent brand experience, especially at scale. Builds that long-term resilience he talked about.
Okay, now, thinking about Trent's overall growth, Those twin engines, Westside and Zudio, are just unavoidable. They really define their retail presence. Let's dig into how they perform this quarter. Starting with Westside, what's the strategy there? Footprint, market presence.
Right, Westside. As of June 30th, they had 248 stores.
248.
Oh, typically larger format,
Right.
20,000, 30,000 square feet, across 86 cities. In this quarter, Q1 FY26, they actually opened one new store, but also consolidated one, so net zero change in count.
Interesting. Consolidation, too.
Yeah, their focus seems to be consciously increasing that density in key markets like we just talked about, and also refreshing the existing store footprint. So it's not just about adding numbers, it's about optimizing and strategically densifying.
And how's the online side doing for Westside? Especially with Tata New in the picture now.
That's a huge part of the story. Westside.com, combined with Tata New, saw online revenues jump an impressive 35% in Q1 FY26.
35% online growth.
Yeah. And it now contributes over 6% of Westside's total revenues. What's particularly notable is that Westside Online apparently registers some of the highest volumes compared to similar players in India.
Really? Higher volumes than competitors?
That's what the commentary suggests. It points to strong digital adoption by their customers and, well, pretty efficient online operations, extending their reach effectively.
And beyond just selling, they seem to be pushing hard on brand engagement. What kind of things are they doing?
Absolutely. They're doing quite a bit there. For instance, the Westside Connect program, it included something called a Dimapur Takeover event. Sounds very localized. They also had a Westness Women's Fun Run in Bangalore. Over 2,300 runners, apparently. Yeah. That's a great way to build community, brand affinity.
Definitely.
And they're collaborating with universities, Rivi University, BMS College. That's clearly strategic, right? Trying to attract Gen Z, boost awareness among that crucial group.
Tapping into the future customer base early.
Exactly. And in terms of new stores, even though the net count didn't change, they did open in places like DN Nagar, Mumbai, a key urban hub, but also Golapuri, Vijayawada, Rajpur Road, Dehradun, Vikas Nagar, Lucknow. So consolidating in some metros while still reaching into growing Tier 2 cities.
A mix then. Okay, so Westside is refining, growing online, but then there's Zudio, the real phenomenon in value fashion lately. How does its explosive growth fit in?
Zudio is, well, it's certainly something else. As of June 30th, 766 stores.
766. That's a massive expansion.
Including 2 now in the UAE. Stores are typically smaller, 7,000, 12,000 square feet. During Q1, they opened 11 new ones and consolidated 10. So a net increase of 1, bringing them to 235 cities.
Still consolidating some there, too.
Seems to be part of the optimization strategy across the board. But Zudio's growth strategy is clearly about aggressively expanding into newer Tier 2 and Tier 3 markets.
Right, pushing beyond the big metros.
Yeah. They openly acknowledge these markets are still, emerging in terms of fashion adoption and spending power. But they see substantial opportunities evolving over different time horizons. It's a calculated long-term bet on rising aspirations and incomes in these areas.
So they're planting flags for the future.
Pretty much. We're seeing new stores pop up in places like Hinjawadi, Pune, Civil Lines, Nagpur, but also Azadpur Metro Delhi, Aradhya Mall, Ghaziabad, Jabakat Sursur, Punamali, Chennai. It's a widespread.
Okay, so you mentioned the company is focusing more on this micro-market idea rather than just store-by-store performance. But the report notes low single digits for like-for-like growth in the fashion portfolio. Some investors might look at that LFL number and pause. How should we interpret that?
That's a really critical observation. Like-for-like, or LFL, growth sales from stores open at least a year gives you that sense of organic expansion from existing assets.
Right.
And yes, the fashion portfolio, both Westside and Zudio combined, saw low single digits LFL this quarter. But Trent's strategic pivot here is key. They're almost explicitly saying they're prioritizing overall revenue growth across comparative micro markets over just the performance of comparative stores.
Okay, so it's market share caption over just squeezing more out of old stores.
Exactly, especially in those new Tier 23 regions for Zudio. It suggests a long-term play for geographical dominance, even if it means slightly lower growth from established stores in the short term. It's a calculated risk, betting on saturation winning out.
And profitability during this expansion.
That's the other key point. They state the gross margin profile for both Westside and Zudio remains consistent, so they're holding on to their profitability even as they expand rapidly.
That's crucial.
And the company viewpoint is that full-year results are more representative anyway, not just one quarter's LFL.
Yeah.
When you connect this to the bigger picture, their total fashion footprint is now over 13 million square feet. The scale is just enormous.
13 million square feet. Okay, moving beyond the fashion empire then. Trent isn't only about clothes. What's happening with their other ventures, particularly the Star business food and grocery and those emerging categories?
You're right. Diversification is definitely part of the strategy. The Star Business Food, Grocery, Daily Needs operates 77 stores.
77.
They added 2 but closed 3 during the quarter, so a net decrease of 1. Retail area is over 1.3 million square feet across 10 cities.
Okay. And performance?
Revenue for Q1 FY26 was 869 crores.
Solid number.
But interestingly, the like-for-like growth for the quarter was flat.
Flat LFL and Star. Tough market.
It really is. The Indian grocery space is incredibly competitive. New players, online giants, it's constant battle.
So what's Star's edge then?
They highlight competitive prices, strong availability, differentiated fresh offerings, and crucially, a growing range of their own branded products.
The own brands. How significant are they?
Massively significant. They're trending at over 70% of Star's revenues, specifically 73% in Q1 FY26, up from 72% last year.
73%. Wow. So almost 3/4 of what they sell is their own stuff.
Exactly. Think about the control that gives them over margins, quality supply. It builds serious customer loyalty. These cover everything. Fresh is 19%, staples 25%, FMCG 24%, general merchandise and apparel 32%.
Any standout own brands?
Yes, they mentioned Smartle, an own brand in general merchandise, holds an incredible 82% share within that category at Star.
82% share for one own brand within its category. That's dominance.
It really shows the power of their private label strategy. Chairman Tata called the food space opportunity exciting, but also competitive, expressing conviction that Star is well poised to deliver much consumer value and growth. So, acknowledging the fight, but confident in their approach.
Okay. And beyond Star, those emerging categories, beauty, innerwear, footwear, how are they doing?
They're doing very well. These categories are growing significantly. They now account for over 21% of Trent's total revenues.
Over a fifth of the business already. What's driving that?
It seems to be a mix of things. Definitely some cross-selling people already in Westside or Zudio picking things up.
Makes sense.
But Trent is also strategically building these categories out. Dedicated sourcing, marketing. They're tapping into a rising discretionary spending, especially among younger consumers who are very interested in beauty, personal care, and fashionable footwear.
So it's a smart move to grab more of the customer's wallet share.
Exactly.
Yeah.
Creates new revenue streams, adds another layer of diversification. It's not just fashion anymore.
Okay, so beyond the brands and the numbers, what's underpinning all this? Let's shift to the foundations: technology, sustainability, social responsibility. How are these shaping Trent's strategy?
These are definitely not just afterthoughts. They seem quite integrated. Their investments in technology and automation are clearly paying off.
How so?
Well, they state it's aided in delivering stable operating economics and realizing gains of operating leverage.
Okay, stable economics, operating leverage, basically becoming more efficient as they grow.
Precisely. As sales go up, their fixed costs don't rise as fast, leading to better profit margins. A concrete example they give is implementing Internet of Things IoT with smart energy solutions.
IoT in stores.
Yeah, at 395 stores. It's not just tech for tech's sake. It helps optimize conventional power use. Tangible cost savings, plus it reduces environmental impact.
Right, and on that environmental point, sustainability.
They take it seriously. They have a B rating in the CDP Carbon Disclosure Program's Climate Change 2024 evaluation. That signals to investors and to customers who care about this stuff that they're conscious of their impact. It's part of that resilience idea again.
Makes sense. How is their strategy structured?
It's built on 3 pillars. First, resource efficient. Focuses on energy conservation, renewables. For instance, 40% of their electricity demand is met through renewable energy.
40% from renewables. That's quite substantial.
It is, mostly via solar rooftops at 3 distribution centers. It's good for the brand, potentially lowers long-term costs, and hedges against energy price hikes.
Okay, pillar 2.
Responsible by design. This emphasizes materials, supplier development, supply chains. They mention achieving fabric traceability using things like global organic textile standards, and making sure vendors comply with CEDEX Meta for pillar standards.
So ethical sourcing, supply chain transparency, important for risk mitigation too.
Absolutely. And pillar 3 is people conscious, prioritizing employee well-being, growth, things like assistance programs, health and safety, skills training, diversity and inclusion.
Any specifics on training?
Yeah, they mentioned in FY25 over 1,300 man-hours of health and safety training and over 4,800 man-hours of skills and development training. Shows a commitment to their workforce.
Their CSR initiatives also seem pretty impactful, going beyond just business operations. Can you tell us about a couple?
Definitely. One that stands out is crafting a better planet. This supports women entrepreneurs in Kutch.
Okay.
They help them convert plastic waste, actual plastic bags, into unique products. Sunglass covers, laptop sleeves, sold online and at exhibitions.
Turning waste into products, empowering women, that sounds great.
The goal is ambitious. Empower 1,125 women, upcycle over 1.2 million plastic bags, imagine that amount of waste diverted, and hopefully increase their monthly incomes by 50%. It's a real circular economy approach.
That's impressive. Any others?
Then there's the Trent Scholar Program. It's a partnership with the Carta Initiative Foundation, India.
What does that do?
It supports 100 students, Trent Scholars, from highly marginalized backgrounds. They get laptops, living expenses, internships, mentoring, certification support, all to help them pursue higher education at top universities.
Investing in education for those who need it most.
And apparently, it's working. They highlight that all the Trent scholars studying B.Tech Computer Science and Psychology at Vidya Shilp University are in the top 5% of students there.
Top 5%? That's remarkable. It speaks volumes about the potential and the support.
It really does. It's about building a future talent pipeline, yes, but also about contributing to social mobility in a very tangible way.
So, after this whole deep dive, stepping back, what's the big takeaway from Trent's Q1 FY26 performance? How would you sum it all up?
Well, if you connect all the dots, you see Trent demonstrating really robust financial growth. That's clear. It's being fueled by smart, strategic expansion and innovation in their core fashion brands, Westside and Zudio. Then you have the diversified strength coming from the Star business, powerfully leveraging his own brands for better margins and loyalty.
Right.
And crucially, underpinning all of this is a deep commitment to operational excellence, driven by tech and automation, running alongside a serious focus on sustainability and social impact. These aren't just add-ons. They seem built into their model for resilience and long-term value.
A multifaceted picture, then. Growth, strategy, efficiency, and responsibility all working together.
I think that captures it well.
Okay, to wrap up then, let's leave our listeners with something to think about.
Okay, so considering Trent's strategic focus on increasing density in key markets, really owning those areas, and simultaneously expanding into those emerging Tier 2 and Tier 3 cities.
Right, that dual approach.
Coupled with their sustained investments in technology and sustainability, how might their multifaceted approach to growth uniquely reshape the broader Indian retail landscape in the coming years? Think beyond just Trent's own balance sheet. What could the ripple effects be?